Hi guys, and welcome back to this channel. Now I know you have been buying when everyone is selling. I know your SLs have been getting hit. I know for sure that sometimes you can't even identify the trend, right? So the question here is why? Why can't you do all this? It's very simple. When traders we start asking ourselves these questions, we end up piling up a lot of emotions, losing our confidence, and when all these frustrations build up, it might even lead to us quitting trading, right?
I cannot do this any fucking more.
So today I'm going to share to you a very simple technique that will allow you to identify all this with just something simple. So let's dive in. So it's very simple. We are using the first 5-minute candle of the day, right? That's what we need. Now we don't care whether this candle is a bullish candle or a bearish candle. We don't care about that. All we need is just the candle. Now when you get your first 5-minute candle of the day, what do? Pick your rectangular tool, right? Mark from the top the high of the candle to the low of the candle plus the wicks, right? Mark from the top to the low, simple as that. Now try your best and do extend this rectangle here to to your right, so that no matter how long or no matter how wide the trend goes, right, you can still find this on your chart. No matter how long it goes, you can still find this on your chart. Simple as that. Now when this is achieved, what do? You now know your buy zones and your sell zones. All trends that are above this level are buy zones. All trends that are below these levels are sell zones. When you are in this level, you sell to the downwards. When you are above this, you buy until you see a change of character, right? So you buy until you see a change of character here. When you see a change of character, then you now know that, oh, we are retracing back to this level. When we drop through this level, then you sell again. Simple as that. Now I've been using this and it has been working for me for like 2 years now. Very simple. I don't care about finding trends on the daily chart or the weekly chart. No, this is just what I do. I use the 5-minute candle. That's it. That's just what I do, and it works. Now you can enter into trades using your fair value gaps or your break of structures, and you exit again with change of character. When you see a change of character, you exit. Now understanding this is very good, right? So try your best and understand it very well. Listen to what I'm saying and do as I do, right? Simple as that. What I'm doing here, that's what you're supposed to do. So look at it very well and just repeat the same thing, and it's going to work for you, trust me. So this is just last week. Let's use last week as an example. This is last week. So this was our first 5-minute candle. As always, you mark from the top to the bottom, right, and you extend it to your right. Simple as that. When you extend this to your right, now you know your levels. You know that when price is below here, you look for sells. When price is above here, you are in a buy zone. You look for buys. You don't look for sells at this level, and you don't look for buys at this level, right? Simple as that. So let's see what happens. Now we can see that price has wicked to the downside, right? So this is our last low. Let's mark it down. Now when price takes out this low, that's our break of structure. We enter into the trade. Simple as that. Until we see a change of character, right? So let's see. Now looking at this, price never took out that low, and we are back to the buy zone. And you know for sure that when we are in a buy zone, you do you look for buys. You look for levels that you can buy. So looking at this is our last high, right? This is our last high that price has just taken. Now you can wait to see whether price will pull back to this high for you to take or enter into your trade. Simple as that. Or you look for a new break of structure above here, then you enter into the trade going upward. Just simple as that. It's not a big deal. Now let's see what happened. So price actually moved down to this level, right? So you could have entered into your trade at this level. When price moved to this level, you could have entered into your trade, simple as that. Putting your stop loss just below this, then your entry could have been here. Then you target either 1:2 or 1:4. So let's say your first TP was what, 1:2, right? Simple as that. So this is our first TP. If this is our first TP, let's mark it. This is our first TP. Then 1:4 is our what? Our second TP, right? Simple as that. Now I normally enter into 3 trades or 4, depending on how good I see the trend to be. So I could have entered into 3 trades here or 1 trade here. When we break this high, then I'll enter into another 2 or 3, right? Simple as that. So let's see whether your TPs could have been taken. Now as you can see, first TP taken. Now second TP taken, right? Second TP taken. So if you are like me, you could have allowed this trade to do what? To go on. You could have allowed the third trade to go on by just moving your stop loss to what? Break even. You could have allowed the third trade to go on so that you see what happens, right? At this point, your first TP had already been taken out, the second TP had already been taken out. So let's see where the trade will reverse. Looking at it, we are still going up higher, right? So by the looks of it, on this day, you wouldn't have gotten out of the third trade. You would have been inside this whole trade. And you'd have gotten a lot of profit from it, right? Simple as that. You could have gotten a lot of profit from this whole trade. Now, mind you, the good thing about this method is it free up your mind, because you know we are in a buy zone. When you bought around this level, it frees up your mind until you see a change of character and the trade is moving towards this level. You don't go out of the trade, so you can be in a trade for this long. You see me entering into trades like 13-hour trades. You see me entering into trades and I'm inside that trade for almost 10 hours, right? This is just the technique I use. It's very, very simple. Now let's go to Tuesday and see what happened. So this is our what? Our first 5-minute candle on Tuesday, right? So you mark from the top to the bottom. Simple as that. And you extend it to your right as usual. Price just came down, right? Price just came down. We are in a sell zone. What do? You either use this fair value gap around. You see, this is a fair value gap. This is a fair value gap. Now you can use this fair value gap to enter into your trade, putting your stop loss at this high, or you wait for a break or structure, right? Now I would have used this fair value gap if I was going to enter into this trade. Simple as that. I would have used this fair value gap to enter into the trade, putting my stop loss either up here and I'll be targeting which low. This would have been my first TP. So this would have been my first TP right here. So this would have been my first TP, and my second TP could have been here, right? Now we have what? This is a what? A support. This is a support right here going up. This is another support right there going up, right? So this could have been my first TP. Now let's see what happened. So price could have hit your first TP and your second TP could have been doubled, right? You could have doubled your second TP. Bring it all the way down to this level. This could have been your second TP. Now your second TP couldn't have been hit, right? But I want you to check out something. I said you enter into this trade until you see a change of character. Now look at this. This was a what? A change of character right here. So if I were you, I could have gotten out of the third trade at this level, right? When the trade reversed to this level, taking out this high, I could have gotten out of the trade. Simple as that. Now we can see the price is just going back to the what? That 5 minute candle. Price is just going back to the 5 minute candle. Now when price moves above this 5 minute candle, we are in a what? A buy zone, we buy. But when we also see a what? A rejection at this 5 minute candle, and we can see that there are some rejections. If we see a rejection there and we see a break of structure, we can also enter into the trade targeting these lows again, or these lows, right? So let's see. Now this was a change of character, so you could have entered into this was a break of structure rather, so you could have entered into a trade at this level with your stop loss just above this high or above this high. You could have entered into your trade at this level, then your target could have been this, right? That would have been either 2:2 or 1:2, right? So simple as that. Now your TP could have been hit. Very simple. And you know, we are still in what? We are still in the downside of the trend. We are still in the downside of the trend. So indirectly, we are still looking for sells. We don't look for buys. Simple as that. Now let's go to what? Wednesday. So this is Wednesday. This is our first candle. What do we do after that? As usual, we mark our levels. We mark our levels. Now we know when price is above this, we are buying. When price is below this, we are selling. Now the reason why I did not take out this is because they are very important, right? When you leave these highs in your trade, the already marked locations, when you leave them on your trade, it gives you what? It gives you a very nice either rejection or support when price moves into those. So don't take it out until the week is over, then you can take it out, right? When we are starting a new week, you can take it out. So let's see. So price is upward. You see price went up, but we don't have a very nice what? Break of structure, so you don't enter into the trade. Now we are at the sell zone. If we get a very nice break of structure here, you enter into the trade. Now this is the last low, right? So when price moves towards this and break through this or this, you enter into the trade. So as you can see, price never took out what? Price never took out this low again. So first high, first low. Price did not take it out. Price went all the way back into this level again. Now this was a fair value gap. I could have entered into a trade when this fair value gap is broken, right? So I could have been in a trade at this level. When this fair value gap is broken, I could have entered into a trade. This is the fair value gap. That's the end of it. Now when this fair value gap is broken, I could have entered into a trade at this level. So I could have entered into a trade here. Targeting these highs and putting my stop loss this here, right? So it was broken. I could have entered into a trade. This is my first high, and if I'm going to double it, I'll get my second high, right? So first TP here, second TP up there. So let's see what's happened. So first TP was taken, and we had a very nice rejection, right? First TP taken, that was our last high. This is now our last high, right? Last high, we came back to this level of support. This is now our last high. Now when this is taken, we know that we are still going up. And what do you notice here? You see that on this level, when price reach this level, just look at it. It has done this nice fake out and it's back again. So you could have what? Notice that either price is going to reverse to the downward path, or what is going to happen? Price is going to go way up, right? So at this moment, your last trade, you could have brought it either close to break even, or you could have just bring it to this level here, so that you have something to take home when price hits this, right? So let's see. Now I guess this was uh I guess this was a news candles, right? I guess this was news candles, but looking at it, it has rejected from this high, rejected from this low. Now any level that you get a what? A break of structure, this is the last high, this is the last low. If you get a break of structure here, I wouldn't still enter into a trade until we are in this low, right? So let's see what happens. So all of a sudden, price has moved towards the downside, right? Now you can find your entry here. Simple as that. Many people think that it's every time that you are supposed to enter into every trade, right? Now it's not like that. Sometimes you allow some trades to go so that you find better entries. Now someone could have been striving to enter into this trade, but I would have still left it, right? I would have still left it just to find a very good trade to enter. So let's see what happens. So looking at this, price has moved back to this fair value gap. Now you could have entered into a trade at this fair value gap, right? This is a very nice fair value gap. You could have entered into a trade at this fair value gap. You could have entered into a trade at this fair value gap. Simple as that. And you'll be targeting either this low or this low, right? This low could have been your first TP, your fair value gap. You could have entered into a trade at the tip of the fair value gap. This low as your first TP, this as your second TP. Simple as that. It's not a big deal. Now let's see what happens. Now you can see that price actually hits your what? Your TP. And this is what I do every single day. It's just simple like that. When price is above this level, you do what? You buy. When price is below this level, you find your levels and sell. It's that simple. You don't have to stress yourself. Now this makes it easier for you not to be found on the wrong side of the market. Imagine buying at this level while price is doing what? Going down. Imagine selling at this level while price is doing what? Going up. So it doesn't make sense. So just understand this every single day, then you try and do what? And use this method. You see how simple and how lucky you are going to be in every trade that you are going to enter. That's just it. So thank you guys for watching. I'll see you guys in the next video.